Hello students, in our previous class we discussed and learnt about life insurance business. Today we will be learning about general insurance business, its concepts and various forms of general insurance business, more specifically fire insurance and liability insurance. Objective of this lesson is to enlighten the students about the meaning and concept of the general insurance, public liability insurance and fire insurance. Provide inputs on nationalization of general insurance business, establishment of General Insurance Corporation of India, and opening of markets for private players in the area of general insurance business. Explain the students about the meaning of fire, elements of fire, risks covered by the fire insurance policy, and claim settlement. Discuss the nature and scope of public liability insurance, scheme of public liability insurance, constitution of fund and the process of the claims settlement. General insurance business. Section 2(6)(b) of the Insurance Act 1938 defines that the general insurance business means fire, marine or miscellaneous insurance business, whether carried on singly or in combination with one or more of them. The fire insurance and marine insurance covers specialized risks. The general insurance business covers assets other than human lives and known as non-life insurance business. The general insurance contracts are short-term insurance business and mostly for a period of 1 year and renewed after expiry of the term every year. The premium is paid in one installment in case of general insurance business. In case of a general insurance contract, claim is paid only on the happening of the event insured during the continuancy of the contract. If no event occurs, no claim is paid. On happening of the event, the amount payable depends upon various factors such as the insurance amount mentioned in the policy, the actual loss suffered by the assured, the average class of the insurance, or under insurance or excess insurance, and the approximate cost of the event. Principles of general insurance contracts. Like that of life insurance contracts, the insurable interest, good faith and proximate clause are the important principles applicable to the general insurance policies. Unlike the life insurance contract, the general insurance contracts are the contracts of indemnity. All the contracts of general insurance such as fire, burglary and marine are contracts of indemnity. The principles of good faith plays an important role. A declaration made by the assured during filing of the proposal form and declaration or the insurer while accepting the proposal and issuing of the policy forms a part of the contracts. Proximate cost is the cost which sets other costs in motion. Application of the proximate costs to the life insurance and general insurance business is of most importance. But the applicability of the principles of proximate cost is most reasonable in the marine insurance, accidents and insurance business. The assessment of the cost in the fire insurance claims is difficult but is important in assessment of the insurance claim. The intentional or negligent acts of the assured may be responsible causes which may bring the loss or damage to the asset. The risk is a threat to the existence of the asset. It is circumstances where the existence of the asset is in question. The risk depends upon various factors for each and every kind of property. The presence of risk and intensity or frequency of the risk are the grounds for calculating the premium of the insurance contract. The more the risk to the asset, the cost of the insurance is more and the premium payable is also more. The proceedings of the general insurance business, particularly calculations of the premiums and risk coverage, are to be made as per the advice of the actuarial experts. The latest amendments made to the Insurance Act 1938 and appointment of the Insurance Regulatory and Development Authority Act 1999 have given powers to the regulatory authority to supervise and regulate the business of the general insurance in India. The Insurance Act 1938 is also applicable for the general insurance business on matters such as offences, penalties, provident societies, insurance committees, tariff advisory committees, and solvency margins, etc. In nutshell, the general insurance business is covered by the provisions of Insurance Act 1938 unless otherwise excluded by the Act. The General Insurance Business Nationalization Act 1972. The General Insurance Business Nationalization Act 1972 is enacted to provide for the acquisition and transfer of shares of Indian insurance companies and undertakings of other existing insurers in order to serve better the need of the economy by securing the development of general insurance business in the best interest of the community and ensure the operations of the economic system does not result in the concentration of wealth to the common detriment. For the regulation and control of such business and for matters connected therewith or incidental thereto. Formation of General Insurance Corporation. The central government has incorporated a government company, the General Insurance Corporation of India, to supervise, control and carry on the business of the general insurance in India and abroad. The authorized capital of the company is rupees 250 crores. Sections 4 and 5 of the Act enable the central government to acquire the business of the existing insurers and or merge the businesses of few existing insurers and formulate new companies for the purpose. The newly formulated 4 companies, that is Oriental Insurance Company Limited, United India Insurance Company Limited, National Insurance Company Limited and New India Assurance Company Limited, are called the acquired companies. They carry the general insurance business under the supervision and guidance of General Insurance Corporation of India. The capital, assets, liabilities and other rights acquired from the existing individual insurers was transferred to the newly formed companies. The General Insurance Corporation, after the establishment of IRDAI and its directions, has entered into reinsurance business in the year 2002, and other 4 acquired companies were delinked with the General Insurance Corporation and made them as independent companies to deal with the general insurance business. The functions of the General Insurance Corporation of India are aiding and assisting in the matters of the providing services to policyholders of the general insurance, controlling the acquiring companies for the healthy insurance practices and to render the efficient services to the holders and creating a competition among the acquiring companies in providing services to the policyholders. Fire insurance, meaning and nature. Section 2, subsection 6A of the Insurance Act 1938 defines fire insurance as the business of effecting, otherwise than incidental to, some other class of insurance business, contracts of insurance against loss by or incidental to fire or other occurrence customarily included among the risks insured against in fire insurance policies. Fire insurance contracts are contracts covering the risks caused either by fire or acts incidental to fire. The origin or cause of origin of the fire damaging asset is not of importance. The risk of fire is simply an unforeseen, unexpected event caused either by accident or incident. The contract of fire insurance is valid as long as the assured has an insurable interest in the contract or in relation to the asset insured. Risks covered under the fire insurance policy. The risk is the essence of the insurance contract and it runs throughout the period of validity of the insurance contract. The risk and loss to the asset are correlative, and loss of an asset in terms of money depends upon the volume and nature of the risk. It is a special contract dealing specially with the risk of the fire and incidental to fire, and the plain meaning of fire means and includes ignition and combustion. The ignition and combustion are essential elements to the constitute the fire insurance. The asset should catch fire due to ignition and it should be totally burnt because of the combustion. If any fire is developed without ignition, maybe by way of chemical reaction, it does not amount to fire and insurance coverage is not available. The insurer may repudiate their liability and fire policy when the fire is not caused by the ignition and the combustion. Loss caused by the fire due to the negligence of the assured is covered, but the fires caused due to malified intention or to gain profits are not covered. The damage caused by the water which is used to control the fire during the firefighting, damage caused by the fire brigades in execution of its duties, loss to the properties removed from a burning building due to rain, theft and actual loss caused while removing the property from the fire vicinity, and any damage caused to the asset due to fall of walls of burning building or losses suffered by the assured while acting to mitigate the loss from the operations of fire are covered by the fire insurance policy. The fire risk does not include the damage by the explosion, as there is no ignition in the process of fire. The loss of the asset due to lightning is not covered by the fire policy. But if the lightning causes the ignition of fire and fire is treated as a damage due to fire, the fire policy does not cover the fire caused by the fermentation, natural heating or spontaneous combustion, or fire caused by heating or dyeing processes or burning the property by the order of the public authority. The spontaneous combustion can be covered at an extra premium. The fire policy covers the risks that are incidental to fire and directly attached to fire, such as damage caused due to explosion or implosion other than the destruction or damage caused to boilers, machinery or apparatus that are used in the specialized industries. The damage to aircraft or to the property dropped from the aircrafts. The damage caused from the missile testing operations. Damage of bush fire excluding the forest fire. It will not cover the loss, destruction or damage caused by war and kindred perils. Loss, destruction or damage caused to the insured property by pollution or contamination, nuclear peril, loss or destruction caused to the stocks that are placed in cold store units is not covered by the fire policy. The fire policy covers the property of a person such as buildings, may be of residential or commercial nature, furniture or machinery or other property that are movable and tangible. Fire insurance contract. Fire insurance contract is valid if it contains all the essential elements of the insurance contract, such as the parties to the contract should have the capacity to contract, the consideration should be lawful and not forbidden by law. The formation of contract of fire insurance is same as any other type of an insurance contract. The assured submits the filled up a proposal form along with the required information of the asset and risk insured, and insurer, after verifying the facts and figures mentioned and satisfying himself, accepts the premium and issues a cover note or the policy document as a token of the conclusion of the insurance contract. The contract of fire insurance policy is governed by the general principles of insurance law, such as presence of insurable interest, law of indemnity, principle of good faith and proximate cause. The insurable interest in the fire insurance contract need not be present at the time of conclusion of the contract, but the insurable interest should be present at the time of the loss of the subject matter or the asset. Unless the insurable relation to the asset is shown, the loss of asset cannot be assessed, and loss is compensated in the terms of money and money worth. The fire insurance contract is based on the principles of indemnity. The estimation of the loss of asset may be made for the loss of the profits, standing charges, increased cost of working and increased cost of reinstatement of the asset, but the maximum extent or the loss that is incorporated in the policy document of the contract. Fire insurance policy. The fire insurance policies are of the short duration, period of the contract ranging up to 1 year. The policy has to be renewed before the expiry of the policy. The renewal of policy does not extend the period of the policy, but it creates a new contract of the insurance between the parties on the original terms and conditions of the policy, and to save the original asset from the risks already mentioned in the original policy. Loss assessment and claims settlement. The policy document contains the procedure for the loss assessment and claim settlements on happening of the event of the risk. The insurer is having the right to reject the claim if the claim is not filed within a period of limitation or otherwise in accordance with the customs prevailing in the particular class of the business. The insurer is having the right to replace the property that is insured or and to repair the property to make same as usable. The loss assessment and payment of damages depends on the type of the policy that is entered into. If the policy is valued insurance policy, the maximum amount payable is the amount valued and incorporated in the policy document. If the policy is open policy, the payment is in accordance with the certificate or assessment made by the loss surveyors subject to the maximum amount stated in the policy document. No sentimental or notional valuation is made. The loss may be total loss or partial loss. The value of the asset should be a real value of the subject matter insured and value as the place of the insured. The market value of the property destroyed is considered for the payment of the damages. This gross market value is the adequate compensation, but the final yardstick to measure the value of the asset damaged is the real value of the asset or the insured amount that is specified in the policy document. On occurrence of the event of the fire, and if the insured property is damaged, the assured is under duty to give a notice of loss to the insurer. The insurer, after receiving the notice, appoints surveyor and loss assessor to inspect and report the loss. The surveyor immediately undertakes the preliminary survey on the cause of fire and submits the preliminary report to the insurer, and the insurer, on verifying and satisfying themselves, issue an order to assess the loss and to report the principle of valuation of asset. After considering the various factors, submit report to the insurer, and insurer arranges to pay the claim amount as per the names available are shown in the policy, or to the person having the interest, or to the joint names holders of the policy. In case of the small claims, the summary procedures are followed to pay the insurance amount. These claims are concerned with the claims of household goods. The declaration and statement of assured is the basis of the assessment of the claim, and the insurer, if required, sends an agent for inspection of the insured property to discuss and negotiate the claim, and the decision will be final and claim will be paid to the extent. Now let us understand the Public Liability Insurance Act 1991. The Public Liability Insurance Act 1991 and the Public Liability Insurance Rules 1991 are made with the purpose of providing immediate relief to the persons affected by accident occurring while handling any hazardous substance or for matters concerned therewith or incidental thereto. The main purpose of the Act is to give immediate relief to the victims of the accident who will be in a state of distress after the happening of the event or accident. It is a public policy to save the weak persons from the owners of the industries who are very powerful and also very influential politically and economically. Acting on the suggestion of Supreme Court and considering the importance of the settlement of compensations and payment of compensation to victims on time, The Parliament has enacted the Public Liability Insurance Act 1991. The accident. Section 2, subsection A of the Public Liability Act 1991 defines accident as an accident involving a fortuitous or sudden or unintentional occurrence while handling any hazardous substance resulting in continuous or intermittent or repeated exposure to death of or injury to person or damage to any property, but does not include an accident by reasons only of war or radioactivity. Thus, the accident is a sudden and unintentional occurrence which may lead to death of a person or injury to a person, or may be causing damage to the property of a person or group of persons. Thus, incident may be due to exposure of the person to the hazardous substance or handling of these hazardous substances. The Act also defines the process which constitutes the handling of the products. Handling in relation to any hazardous substance means the manufacture, processing, treatment, packaging, storage and transportation by vehicle use, collection, destruction, conversion, offering of sale, transfer or the like of such hazardous substances. Thus, during packaging, storaging and transportation or otherwise, if a person come across hazardous substances and sustains injury or damage to the property or any permanent disability, the person is eligible to get compensation from the company where he is working. Thus, under the public liability insurance, the risk is open to anybody or everybody who is undertaking the work of handling of hazardous substances. The risk may be a death or disability due to the accident. The disability may be of permanent nature. This risk may be of industrial and non-industrial risks. The industrial risks are at manufacturing premises, including godowns, warehouses and transport of materials from and to the factory and also in the factory premises. Non-industrial risks contain the risks at hotels, flight kitchens, cinema halls, office and administrative premises of medical establishment, airport premises, film studios, educational institutions and warehouses, etc. Section 3 of the Act empowers the beneficiary to receive the claim on principle of no fault. The claimant shall not be required to plead and establish that death, injury or damage in respect of which the claim has been made was due to any wrongful act, neglect or default of any person. Every owner is under a mandatory obligation to purchase insurance policies depending upon the requirement to meet the needs of the employees and nature of the substances handled by them. The existing owners will take out insurance policies within a period of 1 year from the date of commencement of the Act or starting the business, and he is under obligation to renew the policy every year without fail. The owner should hold the valid policy during the continuance of the business of handling the hazardous substances. The insurance policy should be taken for the total value of the paid up capital of the business, which should not be more than 50 crore rupees. The liability under a policy will not be more than the amount mentioned therein. The owner will contribute an amount that is equal to the amount of premium to the credit of relief fund constituted under the Act. The central government, state and central government corporations and local authorities are exempted from purchasing the policies under the Act. The district collector is authorized to inspect the place of accident that occurred within the jurisdiction of the collector. The collector has the power to verify the causes for the incident or accident and inform the public or concerned people of officials. Let us look at claims settlement. The injured party or the party who has suffered the loss due to the damage or has a legal representative to the property have to apply to the collector in a prescribed form, given the details as required by the collector within a period of 5 years from the date of sufferings or happening of the incident or accident. The claim application should be accompanied by other documents which are necessary to prove the liability. The documents that are to be enclosed along with the application form are certificate of an authorized physician regarding disability or injury or illness caused by the accident, death certificate and or post-mortem report in the case of the fatal accident, certificate of the employer regarding loss of wages due to temporary or partial disability with a proof of hospitalization for a period exceeding 3 days and certificate about the date of birth or age of victim. Medical bills and receipts. Certificate of cost of repairs or replacement of private property damaged by the accident. Any other document which has the relevance to the claim. The collector on receiving the application will give notice to parties concerned and provide opportunities to them to explain and defend their stand, and after conducting the summary proceedings award the compensation in writing. This process of summary proceedings should be completed within a period of 3 months from the date of receipt of the application. The collector will have all the powers of the civil court in the matter of settlement of claims under the Act. The collector supplies the copies of awards to the parties concerned within a period of 15 days. The owner or the insurer is under an obligation to pay the compensation as awarded within a period of 1 month from the date of the receipt of the orders. If the insurer fails to pay the relief within a prescribed time, the collector will pay the claim from the relief fund and recovers the same from the owner or the insurer as per the procedure of recovery of revenue funds. Establishment of relief fund. Central government, with the powers vested in it under Section 7A of the Public Liability Act 1991, establishes a fund known as the Environmental Relief Fund. The owners, as per the directions of the central government, participate in the equity mobilization of the fund and deposit the amounts in the State Bank of India or any nation's bank. Every owner will deposit in the bank every year an amount equal to the premium paid by them, and fund is developed to meet the needs of the claims. The funds so created are utilized to meet the liability of the claims and awards granted by the collector and discharge the claim liability. This is what we learned about the general concepts of general insurance, public liability and fire insurance in this class.